Ladies and gentlemen, thank you for joining Business Roundtable's briefing on its third quarter 2009 CEO Economic Outlook Survey. At this time, all telephone participants are in listen-only mode. Later, we will conduct a question-and-answer session where you will be given the opportunity to ask questions about the CEO Economic Outlook Survey. If you should require assistance during the call, please press star 0. Today's call is being recorded. If you have any objections, please disconnect now. I will now turn things over to our host, Mr. Ivan Seidenberg, Chairman and CEO of Verizon Communications and the Chairman of Business Roundtable. Mr. Seidenberg?
Okay, good morning and thank you. I'm here with John Castellani from the VRT. Thank you for joining us this morning as we discuss the release of our Roundtable's third quarter CEO Economic Outlook Survey. As you know, the VRT are chief executive officers of the nation's leading companies. Collectively, we represent nearly 10 million employees and more than $5 trillion in annual revenues. The results of our third quarter 2009 CEO Economic Outlook Survey reflect expected business conditions from our company's perspectives for the next 6 months. Conducted quarterly since the fourth quarter of 2002, VRT's CEO Economic Outlook Survey is the leading CEO-based survey of projected sales, capital spending, and employment. This quarter's survey was completed between September 2nd and September 18th, and there were 107 CEOs that participated. So here are some specifics for our third quarter survey. You will find a chart comparing these results with those of previous quarters at Business Roundtable .org/CEO_survey. That's amazing. I hope you all got that. The survey responses reflect an economy that is slowly moving in transition. CEOs are beginning to see an uptick in expectations for sales, which is good. However, this demand has not yet translated into increased capital spending or hiring as of this moment. Of the 3 major indicators included in the survey, sales, capital spending, and employment, the projections of our member CEOs have increased since last quarter's survey, with sales growing the most, capital spending improving modestly, and employment improving ever so slightly. On sales, 51% of member CEOs anticipate sales will increase in the next 6 months, compared with 34% last quarter. 23% expect sales to remain the same, compared with about 20% last quarter, and 26% expect sales to decline, a decrease from the first quarter's 46%. So those are better numbers. On capital spending, 21% of CEOs are projecting higher spending in the next 6 months, compared to 12% last quarter. 44% expect spending to remain the same, compared with 37% last quarter. So what's interesting here is that more people think will stay the same this quarter than last, and 35% project a decline, down from 51% last quarter. Unemployment, 13% of member CEOs expect to add employees, more than the very poor 6% who did last quarter. 47% expect employment to remain steady, about the same as last quarter's 45%, and 40% project lower employment, down from last quarter's 49%. We combined the 3 categories, sales, capital expenditures, and employment, into an index to provide a quick snapshot of anticipated economic conditions for the next 6 months. So this quarter's CEO Economic Outlook Survey's index expanded up to 44.9. This marks a fairly significant 26.4 point increase over last quarter's 18.5. I'd like to just remind you that ours is a composite diffusion index centered on 50, and results can range from a negative 50 to a positive 150. The way you should think about it is, if the index is above 50, CEOs generally think the economy is expanding, and if it's below 50, it's generally contracting. In closing, let me say that this recession has been longer and deeper than any other since the Second World War. We are beginning to see signs of some improvement, particularly in demand. However, capital spending and employment continue to lag. While increased sales are a driver for spending and hiring, the results of this survey show there is not a clear end or sustainability of this result in sight. Business Roundtable remains committed to working with the administration and Congress to continue to appropriately address the pressures affecting our workers and businesses and return our country to a path toward sustained economic growth. So that concludes our our prepared remarks here. And now John and I would be happy to take your questions. So, operator.
Sorry, sir. If you are on the phone and would like to ask a question about Business Roundtable CEO Economic Outlook Survey, please press star 1. We request that you limit your questions to the CEO Economic Outlook Survey. We will now take your questions. Our first question is from Scott Malone of Reuters. Your line is open.
Hi. I guess the question that leaps to mind looking at this result with, the 51% seeing sales starting to pick back up, but just 13% being ready to add jobs, is are we facing, another situation of a jobless recovery? And what's that going to mean for the heading of the economy?
Scott, I think it's too soon to put a label like that on this. And I think the good news is from last quarter to this quarter, companies are seeing some uptick in demand, which is a good thing. And as you know, you need some sustainability of that, which will lead to increase in capacity and then eventually increase in hiring. So at this point, most companies who participated would probably say that they can handle the increased capacity, increased demand within the capacity they have available in their businesses. So I wouldn't put a label on it. I would just say this is the natural next step in the process.
Thank you.
Once again, if you'd like to ask a question, please press star, then 1. Our next question is from Peter McCoy of Business Week. Your line is open.
Hi, it's Peter Coy. Seidenberg, hello.
Hello, Peter.
Just a question for you. Actually had a similar question to the last caller, and you answered it kind of the short term, but if you had to look out for the longer term, how do you think that this recovery might proceed, say, and you and your members, of course, compared to, say, after the 2001 recession?
Well, I'll get some help from John here, but the way I would answer that is that this is the first quarter in the last 3 in which we've seen some increase in demand, so that's a positive thing. And I think, you know this, Peter, that there's a sequence to things. You need forecast to improve, demand to improve, you increase your capital deployment to increase capacity, and then eventually you'll start hiring around all of that. So I think this is just a natural view of it. So I think the good news here, if we can look at it that way, is that this will take a little longer than the past because this has been a deeper recession.
Mm-hmm.
So I think for us to get back to where we were will take companies a little longer to get there. But I think the way I would look at this is that there's a modest positive here in that we've seen the first quarter of some increased demand. And I think we've got to stop there and then see what happens after the next quarter, and hopefully we'll see the next step taken along I think the journey of higher demand. John, would you agree with that?
Yeah, absolutely. Peter, if you look at our data after the 2001 recession, it took about 18 months before the employment levels turned around, the employment expectations turned around, so that, again, as Ivan said, the first that happens is sales, second that happened were capital expenditures, and then, at least based on 2001 and the recovery after that, it was about 18 months before employment expectations turned around so that the preponderance was to grow or stay the same.